Good afternoon, everyone. Welcome back to the stock market and commodities update video. And today we'll be looking at stock market first, and then we'll be looking at commodities. So we'll be looking at QQQ, S&P 500, Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta. And then we'll be looking at natural gas, UNG, oil, gold, silver, and the US dollar. So let's get started. So we're looking at the stock market now, and we have seasonality, as you guys can see, for the past 30 years. 50 years. So we have all these black numbers are green. So essentially from the October low to end of the year, and essentially 88.5% of the time we are green. So you can see only a couple times here we're red, and by the end of the year from the October lows. So seasonality wise, we just entered a stronger seasonality trend. And back in a couple of months, I remember talking to you guys in August and September, telling you guys that those are the weaker seasonalities, which makes perfect sense. You can see we had a pullback from since July, around end of July into August. Here you can see we started pulling back, and we've just been consolidating. So now we are getting pretty close to either breaking out of this downtrending resistance, where we have been tightening up, because you can see the ranges has started to tighten and get smaller and smaller. So that means we will start to break very soon. And obviously we could still chop into mid of November and then break. But QQQ, after Friday's drop, is looking like it wants to try for that resistance again. We aren't that far away. We're just here. We are just 0.8%. Let's just call it 1%. If we get over 1%, we're probably over that resistance. Even if we get over it, doesn't mean it's a clear break, just like we had over here. You can see we were over it, and we came back below it, because these downtrending resistance lines aren't perfect. Because if I tweak this by 1 degree or 2 degree, someone else can tweak it differently. It's not the same as horizontal resistance, where it's a definite number. Yeah, so if we get something like a clear break like that, then obviously that is a clear break. And the best scenario is that we break above it, retest, bounce off of that support, and then continue to head higher, meaning the buyers are serious about taking this higher into the next level of resistance, which will probably come up and test this 378 and 379 zone over here, this top, if we do break out of this tiny range. But as now, it's very indecision in between each other at this moment. We want to see SPY break as well with QQQ for this to be a confirmed nice break. We pretty much U-turned the entire drop on Friday. So, but we are still sitting right under 370 resistance. You can see at this level right there. That top we couldn't get over on Friday. You can see we have a top over here as well. And we're currently sitting right under it. We pretty much just went sideways after this morning move for the whole day underneath that resistance. So if we do break above 370 tomorrow, confirming bull break, we're probably going to come up to test this 371 and this zone right here again, this key resistance. Yeah, a lot of Fed speakers this week, so we'll see how all those economic data comes in as well. I did that over the weekend. I wanted to look at the economic data, and Tesla's having earnings. Netflix is also having earnings this week, so we will see how tech ends up coming in. All right, so let's look at S&P 500. So same thing with SPY. If we do break above this level, we're coming back to test Thursday's high. And if we break Thursday's high, that's a confirmed daily uptrend in SPY. So if SPY confirms a daily uptrend, QQQ very likely will break that downtrending key resistance on that maroon line if SPY just triple top and go higher. So QQQ is going to be the one that's breaking first. And then if QQQ breaks, SPY will likely come up and test that downtrending resistance line over here. So we'll see if QQQ continues to lead while the other sectors in the SPY rotate around, and which is very normal. Tech sector usually always leads, and so the semiconductor stock sector as well. Yep, so we're pretty much in a chop zone. No clear trend here on the hourly. Went to a neutral, still in a neutral, and we just have to break above today's high to confirm a hourly uptrend, which will also confirm a daily uptrend if we do break this Thursday's high. yeah, so just a little break, and we'll get 2 uptrends confirmed from the S&P 500. Obviously, this could still roll over, right? And negate all that in just one drop as well. So we're tightening up, and we'll see who's going to be winning tomorrow. Will be very key, actually, because this range is getting really tight, and tomorrow will likely dictate the rest of the direction for the rest of the week. All right, let's take a look at Tesla. Tesla still tightening up. It's just big move up, big move down, getting tighter and tighter and tighter. So not much to talk about here other than earnings coming up. It will likely dictate which way we break because earning volatility, implied volatility is within, I think it's plus or minus 8%. So very clear, if we get an 8% pop, we're out of that range. We broke out. An 8% drop, very similar. We're at the bottom of the range. So we're right in between of the two ranges. And we'll see which way it breaks between these ranges. Tesla on its earnings. But technical wise, we have confirmed hourly uptrend. So that's a good sign. Talked about it yesterday. So I want to see bulls confirm an hourly uptrend for me to more confident say that this is a temporary bottom for this drop, which is what we did. We had bounced. It being set, broke above pivot high over there. So that's hourly uptrend confirmed. Bulls can be more confident. If it wasn't for earnings, actually I wouldn't even play this if there was no earnings because it's still getting too tight. This tick could just go like this. Bounce, doesn't break above this high, goes tighter, and then can just tighten up into November, right? If we get a clear break out of this range, then we can probably play this. But as of now, earnings is going to be a gamble. So we will see. Just roll the dice and good luck on you guys' trade. But it's good that the hourly uptrend confirmed. So give bulls a little bit more confidence there. Let's take a look at Nvidia. So Nvidia's head and shoulders is not playing out. I mentioned where that the idea of the head and shoulder is going to help us see where the resistance is, but it doesn't mean that it's going to play out because of how strong this stock is. See, this is the left shoulder, this is the head, this is the right shoulder. We got to go all the way down here, right, to potentially ship up the head and shoulders. And we got to break the neckline, which is we got to break this triple bottom resistance here, which is pretty tough, around 400. So unless something crashes in the QQQ in the market, Nvidia is not going to just roll over it by itself, or unless Nvidia itself has a negative catalyst. So now, no signs of that yet. But the idea was that we're pretty clear where the resistance was over here because we pretty much ran up from September 20th all the way to October within one straight line up, and it's super normal to get a consolidation sell off. And looks like it just holding its support on 450. You can see it was prior resistance, strong resistance, now acting as strong support. This is a very good sign for the bulls. And daily uptrend is intact, so it very likely continue as well. And still above the 12 EMA, which is that tail looking line. So 0 red flags for me on Nvidia. So we'll see if it continues to head higher. Apple, same thing. Literally like 10 days straight up and 2 days of consolidation. Today it gapped down and then bounced. Very normal. Just that we need to get it back above 180 and see if we can get above this downtrending resistance line as well. So if we see all these mega cap tech stocks start breaking these downtrending resistance, guess what? QQQ is also going to break this downtrending resistance as well with all the mega cap tech stocks. So let's see if Apple can pull its weight. Coming up, hourly chart is technically early uptrend, but bounce, pivot set, went higher. So that's a hourly uptrend, but lacking follow through at the moment. But we are setting a higher low each time, so that's a good sign. So tomorrow I want to see Apple break above 179 and 180 for this to be a convincing break moment. Right now, just going sideways, but still making higher lows every time. So that's good for now. Right. Amazon here. Similar, bounce back almost all of Friday's lost, and it's in a daily uptrend and just continuing. So no signs of red flags. We're talking about this on Friday, saying Amazon has no signs of red flags after its drop. It's a consolidation and it's still favoring the bulls because we haven't dropped over 50% yet of a retracement. And we pretty much just bounce all the way. Also in an hourly uptrend as well. So Amazon is looking good. Lead bull today. And as long as our uptrend is intact, above the 12 EMA, bulls are perfectly fine. And the red flags at this moment. Google, also no signs of red flags. Made a 52-week high, hitting its uptrending resistance. You can see that we have rejected there from 7 times. And it's very clear how we ran up from it. Pretty much like 10 days straight in a row into resistance. Makes sense that we pull back a little bit. And Google also confirmed an hourly uptrend as well here. So yeah, today it just looked like fear just left the market. VIX was down 11% and everything bounced. So we didn't see the kind of fear that we had on Friday was all alleviated. So we'll see. Maybe seasonality trend will actually play out, right? If there's nothing going on, if there's no real macro news that comes out that any black swan events, then there's a good possibility that we may test this 52-week high in the market for QQQ. So Microsoft broke out of this downtrending resistance line, but it hits its next level support. So it hit 335 level resistance, and it kind of rejected there. So yeah, it did reject from there, but it's still in striking distance because this still looks like a 4-hour bull flag. Let's take a look here. Are we in a 4-hour bull flag? Might be a little bit off. No, we're not because we just got over it. So if we're in 0.382, that yellow box, that's a bull flag. But the idea of the bull flag is that it's a shallow retracement, meaning because it's a shallow retracement, buyers are interested for the next move up, right? This is what bull flags are. Even though there's not a bull flag anymore, the idea of the shallow retracement is still there. So as long as the bulls can hold above 332, this level, and bounce from here, we may retest 335. So we'll see how that goes. Are we uptrend still in? Nope. It's an hourly neutral. We broke the neutral trend here, but daily uptrend is still intact. So we'll see if bulls can break above today's high. That'd be a good sign. All right, let's look at Meta here. After a huge move, 2 days of a pullback, bounce back above 318. So, okay, so that's a very good sign. You guys know where I talk about the teal looking line, 12 EMA. As we were going down, you can see we kept on rejecting the teal looking line. When we're above it right here, we bounce off of it every single time over here. When we're below it, reject it again. And this is just a choppy zone. But now we're back above it. Guess what? Friday's 12 EMA acted as support, this tail looking line, and today we bounced off of it. We came above this 318 higher resistance, strong resistance, now acting as support. Time for Meta bulls, and may potentially tighten up here and go like this. There's two ways I think this would happen. It's because we have bounced so much already. We may go a little bit sideways first before heading higher, but as long as it holds above 318 while it's going sideways, it's a good sign for the bulls. All right, let's head over to commodities. Do this in 6 minutes. All right, so natural gas fell off that level over here. This was still looking good, but now it's retraced over 50%. So on the next bounce, bears have a lot of room now to confirm a daily downtrend. You guys know the characteristics of natural gas. It's always pop and fade, pop and fade, pop and fade. But there's no surprises that this actually faded to the golden pocket zone, which is this 0.5 to 0.618 zone. We'll see if it can hold there, which it did. And it's closed above the 200-day moving average, which is a yellow line. So it's a slight good sign. We V-shaped here, so that's good. Let's see if we can continue to hold this level. Pretty much exactly where we are today. This spot, we don't want to go any lower. That would start shaping up a big red flag. So this is the spot. Bulls need to play defense and bounce pretty much right here. And potentially see if we can maybe get like an equilibrium shaping up, like a tiny range here. A new sideways range here to form some supports along the way versus, coming back all the way down here for no reason because this whole move is just, not there anymore. So ideally, bulls hold above right here pretty much and then start to shape up a sideways zone around these higher zone. We don't want to come back to this lower zone again. It's like when we broke above this lower zone, we never really revisited that lower zone. You can see we always chop in this zone. So that is what I want to see. Form a new zone along the way. Give it some sideways range. Maybe get some winter bull moves into November, December. So we'll see after the sideways range, right? If we can get a little bit of sideways range and then bull break, that'll be the most ideal scenario for bulls. For bears, obviously, break the 200-day moving average, come back into this lower zone of this range. That'll be a win for the bears, but we'll see which way it holds. UNG, very similar. Whatever natural gas does, UNG will likely do in a similar fashion, but obviously not exactly. But you can see we also pulled back over 50% as well. So on the next bounce, it could start favoring the bears as well for a daily downtrend. But as of now, we did bounce off of 7.18 key level of support, acting as prior key resistance. You can see how many times we have rejected in this zone, right? And now we have bounced off of that, so it's a good sign. Maybe we'll also get that tiny range as well forming up here. That's what I want to see as well. Yeah. Oil, let's see here. See how much time I got. 3 minutes. Okay, oil. Oil's daily uptrend confirmed. Today, just sideways range, inside bar, so nothing new today. Same thing as what I talked about on Friday. Or sorry, on Sunday. And pretty much it needs to get over 78.8, $79 pretty much. You can see this resistance here, which is the same level. And if we can't get over that, then really not going to go anywhere. But we'll see if the oil top is starting to shape up or not. But as of now, daily uptrend intact and no signs of red flag yet. So I don't see an hourly downtrend yet. So can't confidently say this is the top of that bounce yet. If we do break below today's low, which is 77.88, and have an hourly downtrend follow through, then I would say this is marking the top of this bounce. All right, let's take a look at gold. Very sideways, inside bar again today, so nothing going on today. Makes sense after such a huge move. We're probably not going to get another one like that, right? So look at US dollar first. And so dollar had a weak day, so it should have helped gold a little bit, but because of the move it made yesterday, this is just tightening up. You can see we can move up and it's tightening range. So we may go like that into tomorrow, and then that range will break. Whichever way it breaks, we'll know how this flag plays out. We're going to get bull flag at the moment. Yeah, it's a bull flag. See, it's still above 0.382. So we'll see how this bull flag plays out. Does it get negated or does it get breakout? So head and shoulders on this. I remember talking about the head and shoulders when we were 2 weeks back. And I said that if we do come down to this 105 bounce, we know where it's going to head to when it bounces, which is right there, because this left shoulder is forming this right shoulder. So now it's starting to increase the probability of it happening because of today's red day. We had another red day. We're coming back down to 105.6. And if that breaks, that's a confirmed head and shoulders, meaning it's a daily uptrend into a daily downtrend. That'll be significant for the dollar marking its top, very likely if that does happen, because we haven't had a daily downtrend since all the way down here. So, right. So it's been a while. And since at this uptrending time, we haven't had a daily downtrend. All right, that's all I got for you guys. I'll see you guys tomorrow. Have a great rest of you guys today.